This is Rick Rule for the Rule Investment Symposium, July 7 through 11 in Boca Raton, Florida, or from the comfort and convenience of your own home or office via live stream. However you attend, understand that we're going to give you over 50 hours of very valuable programming in only 4 days, more than you're going to be able to absorb. So we're going to make the conference recordings available to you either via whether you attended live or live stream. But more importantly, we are interviewing every single exhibitor and every speaker at the conference before the conference. So you arrive at the conference better able to allocate your time and, of course, your resources. Note that every public company exhibitor at the conference is owned in my own accounts. At every other investment conference I know of in the world, the qualification to be an exhibitor is simply a check that cashes. Exhibitors there are advertisers. Exhibitors at our conference are, in fact, content too. That allows me to make an extraordinary offer to you as an attendee. If you attend the conference, either live or via live stream, and you feel for any reason that we haven't given you your money's worth, your money will be refunded. That's right, solid gold guarantee. The financial risk of the Rule Investment Symposium is all borne by me. So let's get started with the interview process. Today, I interview a returning guest to the conference, Mr. Sean Wade. Sean, tell us something about your investment background and how it prepared you to do what you're doing today.
Thanks, Rick, and thanks very much indeed for having me on. And I'm very excited about attending at Boca Raton again this year and looking forward to seeing you and all the investors. My background really is perhaps in one way, perhaps best defined by what I'm not rather than what I am. I'm not a geologist. I'm not a mining engineer. I'm not an explorationist. I'm a finance guy. And I think you've referred to us in the past as like a mining investment bank, which is extremely helpful because I spent 20 years in investment banking prior to moving across to investor relations and business development in the natural resources space. So I've spent the last 12 or so years in various business development roles, and most of those have been in the junior space and in exploration activities. But essentially, it's been about two things. It's been about ensuring that those companies have this right kind of sustainable capital structure in order to undertake their activities, which, I'm sure we will go on to discuss, is difficult and challenging in current markets, and in as we've seen for a considerable amount of time. But also communicating those stories to investors and explaining clearly how they're going to make money, what we are setting out to do, and managing expectations appropriately so that investors have a clear understanding of the objectives of the company, whilst at the same time understanding the risks that exist in exploration activity. So I like to think that really I bring to Power Metal a strong sense of capital markets, communications, and I'm surrounded by an extremely good team of geologists and explorationists with wealth of experience, and in addition to that, obviously we have people who have a lot of experience in execution of transactions. So I think what we're trying to get across to investors is that we have an all-round package of what we call mining merchant banking, where we are seeking to explore, seeking to develop, and seeking to crystallize value on our assets.
So the name of the company is Power Metal. Tell us the symbols and where it trades and the market capitalization approximately so that we get a starting point.
Okay, so we're principally listed on the AIM segment of the London Stock Exchange. The ticker code is POW or POW, POW.L if you're looking it up on your screen. Market cap is roughly around £15 million. We also have a US OTC listing, and that obviously is something that we hope is going to be of appeal to North American investors, make it considerably easier for them to trade in the stock than it would be via AIM. And AIM, as you know, is a thriving market for junior explorers. So we're in the right space, we're on the right exchange, and the shares are freely traded. We don't have any particularly dominant shareholders. I mean, you've mentioned that you own stock and you're a big shareholder, but there is no kind of 20% plus sort of shareholder. It's very liquid, and there's plenty of free float.
So, Sean, unlike many of the issuers that exhibit at my conference, you're in effect a multi-company exhibitor, a classic merchant bank. Well, I would suggest an exploration merchant bank. Could you describe what that is? Can you describe how, in effect, you aggregate capital, allocate capital, and help entrepreneurs build publicly listed mineral exploration companies?
So what I could perhaps describe that with an actual example of what we've most recently done. So in May 2023, we did an IPO of a subsidiary business which is called Guardian Metal Resources. They have the largest undeveloped tungsten asset in the US, and obviously are right at the center of that critical metals debate and what's going on with President Trump and so on at the moment. We developed the asset in-house. We purchased the main property, what has been up to now the main property, which is called Pilot Mountain. We obviously did some development work, some exploration. We got it to a point where it was suitable for a London listing. We obviously assembled a board and management, and we capitalized the business. We then IPO'd it. So a lot of funds obviously came in from the parent company. We successfully IPO'd it in May. The shares have performed extremely well. And earlier this year, after IPO, we retained around about 45% of the equity. And recently we sold about half of that to a well-known resource investor. And the return that we made for investors on that portion is roughly around 10 times our money. So yeah, it's been a highly successful acquisition. We still retain around about 20% of it. And obviously we're looking forward, we're committed to that holding for the foreseeable future. And at some point, I expect we will monetize that. So that's an example of what we've recently done and how we've added value in that sort of merchant banking sense. Now, following on from that, we have a live IPO process going on at the moment in the company called First Development Resources. This is a very exciting collection of assets in Western Australia and the Northern Territory. The Western Australian assets are, we think, highly prospective for copper and gold, and it's a little bit of a potential lookalike for Greatland Gold, which I'm sure a lot of your investors will know extremely well. And we're looking forward to an IPO of that business and to essentially repeat the same process. Market conditions have been difficult. It's been a painstaking process, but we're nearly there, and we're looking forward to making an announcement on that soon. We will retain, in the case of FDR, something around about 40% on IPO, and obviously over time and at the appropriate time, we will seek to monetize that. The third pillar, sorry, Rick, you want to?
No, go ahead, please.
Yeah,
go ahead.
So there's a third one, which, and this is something that we're extremely excited to talk about, which is a portfolio of 18 uranium licenses in and around the Athabasca Basin in Saskatchewan in Canada. Now, we've gone on a slightly different route here. Rather than doing a London-listed IPO for that business, we've brought in a joint venture partner. This is the same, incidentally, the same investor who we traded the GMET stake, the Guardian Metal stake with. They've taken 70% of that joint venture and have injected £10 million into an exploration program over the course of a year. And that program is due to start next month. And this is going to be, we believe, one of the best funded exploration programs in Athabasca. And we obviously, naturally, one makes no guarantees of any commercial discovery, of course, but we're working in a highly prospective area and we're very well funded. So what has my job been in this context has been to make sure that we have sufficient funding to pursue that project and those projects without recourse to our shareholders and dilution of our shareholders at the power metal level. And that's something that I'm extremely sensitive to. People see, we have a lot of investors who put very hard-earned income into the shares. And it's very important that as much as we can protect them from dilution. So capital management is absolutely at the heart of what we're trying to achieve. So Guardian Metals case, we've sold a bit of stock. We have now a very strong cash position in the business, which means obviously that I don't have to raise capital at the moment. With what we're calling Fermi exploration, the uranium business, we have external funding. So we're drilling with our partners' capital. FDR, likewise, the same. It's raised its own money and is obviously raising more money at the IPO. So what we're hoping to achieve for our investors is multiple returns across the asset base in these various vehicles. So in a sense, one would look at it on a sum of the parts, naturally, and some analysts have done that. And if you do that, you come up with a number considerably higher than the share price, naturally. But it is that merchant banking model that you've talked about, where the twin elements of the exploration ability, the prospectivity, the quality of the assets has to be matched by the right capital structure. There's no point having great assets if you don't have the cash to go and exploit them. And that's where I think we stand a very strong comparison with a lot of juniors. We have good cash position, good quality assets, good people, but that sound capital structure backing it up.
I need to say, Sean, I invested in the company because the process that you're involved in is something that I used to do myself in my earlier years. And it worked very well for me, but it's an awful lot of work.
Yeah.
Assembling the assets, assembling the people, how do I say this politely, tolerating the regulators in terms of the IPO process in Australia or London or Canada is a ferocious amount of work, albeit it was a wonderful activity. And the fact that I could buy stock in you at a discount to my perception of your net asset value and make you do the work was attractive to me. I hope it will be attractive to others. Perhaps you could describe for understanding that people from 30 countries will be watching this interview and attending the conference, at least via live stream. Perhaps you could talk a little bit about London as a capital center for mining investment, not merely AIM, because London investors are less ethnocentric than other investors, more willing to invest in Australia or Canada or other places. But talk about London a little bit and talk about the situs of the company in London.
Yes, well, I mean, look, London has a very long and proud history in the mining sector, as you know, in terms of obviously the majors. We're home to Rio Tinto, BHP, Glencore, etc., Anglo-American. And so I think the UK investor generally understands mining very well. As far as the AIM segment is concerned, as we talked earlier, that obviously is where more of the juniors are listed. And again, I think we have a sophisticated investor base who understand the risks and rewards, have seen companies have tremendous success. I mentioned Greatland Gold as a great example. And I think mining and resources generally is well understood here. The markets, yes, of course, there are regulatory aspects here that there are everywhere. And as you rightly say, getting companies listed is challenging. It's also quite expensive. The advisor fees are what they are, and there's no way around that. But it is a liquid market, and it is a market, as I said, that has a long and proud tradition in the sector. So, I do feel that we're in the right place. I mean, look, people have often said to me, the share price is under pressure. It seems that if, however much you tell the story or however much you report strong progress, it's very difficult for investors to make money. Maybe another market might work better. Canada, for example, where perhaps the incubator model is maybe better understood, or Australia. But other companies have tried that, and I don't think that necessarily that there is no sort of magic answer. London obviously has the advantage of time zone, and we have assets in Australia, we have assets in Canada, we also have assets in the Middle East and in Africa. So, from the point of view of being able to operate across all those geographies, London clearly makes a lot of sense. And I think there are also very strong conferences here. People, attend very good events. So we're very happy being listed here, and I think that whilst market conditions have been extremely challenging, certainly in the 2 years, just over 2 years I've been in this role, it's hard to name a time when market conditions haven't been difficult. But I'm sure, and I saw an interview you did recently where you talked about commodities go first, then the majors, then the sort of mid caps, and then the penny dreadfuls will inevitably follow. And the analogy of the circus whip, and I do believe that that time is coming. I mean, last 48 hours or so notwithstanding, and that we will have our opportunity to deliver fantastic returns in share price terms. We believe, delivered a tremendous amount of value, which is, I would argue, not reflected in the share price. I mean, we look at what I look at is the shareholders' funds per share metric, or net asset value per share, if you like. And that's roughly around about 22 pence a share at the moment, which is up about 45% since the last time we reported full year numbers. And yet our share price is roughly half of that. So we have added a lot of value to the balance sheet through price appreciation of Guardian Metal, for example, where incidentally, AIM has not been a barrier to that company doing extremely well. So that's worth noting. But that is yet to translate into share price terms, which I know is a great frustration for shareholders. But as I think we talked just before we went on air, and you said the benefit of several decades of investing is that you've seen these kind of market cycles before. I remain convinced, even in my time, that we will see those conditions return. And I think if we carry on doing what we're doing and adding that kind of value to the balance sheet, that will ultimately get recognised.
Warren Buffett famously says that Wall Street is the only store where customers buy less when the prices go down. Sean, to the extent that speculators have the courage to participate in the ground floor by helping to create the ground floor in mineral exploration, something which benefited me when I had the time to do it, and they want to learn more about the value proposition, particularly of buying into the process at a discount to NAV. Who specifically do those speculators contact, and how exactly do they reach that person?
Well, that's a great question, and the straight answer, and it's a very easy answer, is that would be me. I have very close relationships with a number of our shareholders individually, where we speak regularly. A lot of people contact me via email. We have a kind of a general email address, which is info@powermetalresources.com, which we're constantly monitoring for feedback and questions, and we always respond to those. We obviously we can be contacted through our website. We are also active in social media, in particular on Twitter or on X, where we're very, very active, and people often direct message me through that. And I'm always very happy to speak to investors at any time around the world. We're very flexible on time. I'm very used to getting up early to speak to Australia or staying up late to speak to Canada. So we're very happy to engage one-on-one with investors at any time. I mean, look, the important thing, Rick, as you all know very well, is that you can have great assets, great execution, great people, and all the rest of it, but you need to have shareholders backing you and people wanting, obviously, to buy the shares. And in order to do that, we have to be open with our engagement, and I believe that we do a pretty good job. We've got a new website launching next week, which I hope will give investors a very clear picture of what we're doing, and we're going to show them on that website the discount to the shareholders' funds per share that I mentioned, which will give a real-time look at what the discount is. It'll be very easy to navigate which are the projects where we're making money, obviously where the news is. So hopefully it'll be a very useful tool for people to properly understand what obviously is and can be a very complex business. I mean, the one bit of feedback we always get is, look, the merchant bank model is great, but you've got a lot going on at the same time. It's very difficult to know which bits are worth what and how it all fits together. So I would urge people to look at the progress we make on the shareholders' funds per share, and that will be updated monthly as we get those figures. So you'll be able to track our progress, but also to look at where we are actually actively exploring. And as I said, the uranium project really kicks off next month. We're going to be drilling almost constantly from May all the way through to October. So there will be lots of news, lots of updates, and obviously fingers crossed from all of us at Power Metal that we will be able to report some interesting intersections and grades and assay results and so on, and really give people the exciting part of exploration, which is the potential to make commercial discoveries, and that's what we're focused on. So it's not just about a clever corporate finance exercise. It's fundamentally at its heart, it's about exploring for critical metals, and Guardian Metal has done that extremely successfully. FDR, I'm certain, is going to do the same, and firming exploration in uranium again will do the same thing. We also have active programs going on in our Power Arabia subsidiaries, we call it, which is our assets in Saudi Arabia and Oman, and that's going to generate a lot of positive news for us going forward as well. So there's always something going on. There's lots being reported, and if people want a stock that generates interest and news, I think we can certainly offer.
Sean, thank you for your efforts on behalf of shareholders, myself included. Thank you too for your ongoing support of the Natural Resources Investment Symposium. I look forward to hosting you in Boca Raton.
Very much looking forward to seeing you there, Rick. Thank you very much for having me.